Hi, everybody. This is Matt Pohl, and today I'm going to be going over how I made $445,000 in 112 days trading a single currency pair, or in this case, a cryptocurrency pair, and how that actually allowed me to buy a Lamborghini, pay the capital gains tax on it, and get this vanity plate. For those of you who follow Dogecoin, would understand. Really excited to be here with you and excited to show you how I did this using the Echo Indicator, one of our proprietary tools. And I hope in sharing this that it gives you some solid insight on how to improve your trading plan and trading strategy, and also helps you get the success that you guys have been looking for. So here we go. So just by way of disclosure, guys, foreign exchange, futures, and cryptocurrency trading is highly risky. You can lose all of your money if you invest, should you decide to engage in live trading. We're not responsible for your investment, trading, or tax decisions. We're not licensed financial advisors, traders, accountants, stockbrokers, or attorneys. We're not licensed commodity brokers and do not engage in or facilitate commodities transactions. We are not an introducing broker. We make no trade or we make no recommendation as to where you should invest or what broker you should trade with. As you apply what you learn, we recommend that you seek advice from licensed professionals. Any trade results that I show should not be considered typical of our students. We do not track and cannot track the results and performance of our students' private trading accounts. We do not know what the typical or average student earns or loses in trading. This is definitely not a get-rich-quick program, guaranteed system, or business opportunity. We sell training and trading tools. We make no promises that our training and tools will generate future income for students, and you may not make your investment back, including your investment in this training. Any redistribution or recording of this material is strictly prohibited without advanced written permission. But if you'd like to redistribute or send it, just let us know, because this is something that I want to share, and I'm doing it with the intention of really helping people. So here's kind of the story, guys. This is how all this started. And this was not that long ago. This was only a year ago that this happened. So if any of you are wondering, like, is this relevant today? Absolutely. Like, the tool I'm using still works today. All of this success actually happened in the last year. So this all happened in 2021. And so 2021, I began watching the crypto markets, getting interested in it, as a lot of you guys have been hearing the buzz and kind of watching it for yourselves. I saw Dogecoin. It happened to be one that I could trade with the broker that I was using. And I started pulling it up on the charts, and I started noticing some really strong setups. So I shared this with a couple of my close friends, people who aren't our students, people who trade on their own, they're not using our tools. And I was like, are you guys seeing anything on your end? Like, is this something you get? And everyone was like, no, I'm not seeing anything. There's nothing going on there. And so I was actually shocked to be seeing this where everyone else who was in the crypto world, actually, at least close to me, wasn't. And so no one was believing me, or that our tools could even predict this sort of thing. And so I got to this place where I made a promise. It was kind of a bet with myself. It's like I was so confident in this trade and what the signals I was getting from our indicator was, that I actually kind of made a bet with some of these friends. And I told them, I was like, guys, I'm just so sure of this. I'm getting such a strong signal. I'm going in on this. I will wager that if this goes high enough and I make enough money on this, that I will actually take the profits and buy a Lamborghini, under the conditions that I can also use the money to pay all of the taxes, all the capital gains taxes that I would have to pay on my earnings. Because when you make money, you got to pay taxes, right? So I wanted to make sure I made enough. And as you guys know, there's really no Lamborghini that sells for $445,000. So I was able to do that. And so the car's in my garage now, kind of as I would actually call it as a commitment to my promise. And if you get to know me, I'm a person that operates at a really high level of integrity. And so when I make promises, I keep them. And so what would happen is, because I had mentioned this to a couple of friends, people were watching Doge, not with indicators, but they were watching the price. And when it finally spiked and I got the run that I was seeing, I got all these calls and texts from friends like, hey, where's the Lamborghini? When you get in the Lamborghini? Because even though they didn't believe me, even though they weren't able to get in on the trade, they all knew what happened to my account. And so they were holding me to that. And, as a person of integrity, I went through, did it. I'm happy that I did. I'm not saying I'm reluctant or unhappy with my purchase, but I did it more as a statement. And more importantly, I did it to show that our tools really work. Like our indicators really do work. And with practice and with time, you can have just incredible results trading if you put in the time and the discipline. So why share now? It's been a year, right? I could have shared this, months after it happened. And I did share, like I drove the Lamborghini into work sometimes. People knew that, the story behind this, but I never actually shared like how I did it and like the strategy that I used. And I'll kind of go through like my reasoning behind that. One of the main reasons was I was actually more concerned about being compliant. I wanted to help everyone and wanted to share this discovery that I had, this way that I did this, but I also wanted to be compliant around it. Another reason was creating a way to teach people like how to use this so that they could test it and trade it for themselves. Like I was really struggling with, like, I knew how to read this, I knew how to apply it. How do I break this down in the simplest way to give it to someone, say, hey, here's actually a strategy inside of the echo indicator on how to practice this that will launch your learning inside of the tool. Because what I'm going to go over today is just like the foundation, and you're going to see it, and it'll actually likely register for you, and you'll be able to go out and test it and see the results. But it's just the beginning. Like this is just the beginning of your adventure learning how to trade this tool. And it's been under a year. And I've also noticed that this is kind of something that people are needing, like a tool on how to get out of their good trades. I've noticed I have so many friends and tons of people that have been to crypto, and they're just like, well, I'll just buy and hold. And it's like, guys, like this is not a solid strategy. Buy and hold is what the apes do, right? For those of you who understand those terms. And people get really hurt when they buy and hold and they don't know when to hold till, right? You've got to have an exit in mind. And so we're going to be talking about that. I hope this tool and this strategy also gives those of you who are buyers and holders really solid opportunities to say, this is a time to get out. I should not be holding this any longer. So the echo indicator has been radically underutilized, and it was the tool that I used to have all these gains and also the tool I used to get out, the tool I used to exit. So here we go. So what is the echo indicator? The echo indicator provides entry signals. That's one thing that it does. It provides exit signals. It provides reversals. And here are the benefits. This is one of the reasons I love this indicator, is it encourages the fundamentals. Meaning, if you've ever read a trading book or followed anyone who's like a avid trader, not a trader who's just been around for the last couple years, because everyone who's invested in the S&P 500 is a superhero right now, right? And that's no question going to change when we see a turn in the market. Not a matter of if, just a matter of when. But for those who have gone through the cycles and have survived the cycles of trading, they'll all tell you you've got to follow the fundamentals of trading. And here they are. And I want to emphasize that the echo indicator, I don't want to say it forces you to keep the fundamentals, but it strongly is encouraging you to constantly stay within the fundamentals of trading. And here are some of those fundamentals. And you've probably heard these before, but it's like, oh gosh, I forget this in my trading all the time. Or if you're new, it's like, oh, I didn't even know this was something I should be doing. And one is to trade the trend. Trading the trend, I mean, it always makes sense. Why would you put in a trade going the opposite direction of where it's going? That's just super high risk. You're basically saying, I'm trying to pick the very top. And in terms of probability, that's just a bad idea. It's like the odds are against you. So you want to be trading the trend. You want to buy low and sell high, right? Everyone, I mean, even Warren Buffett has been preaching this since the beginning of time. Buy low, sell high. This is the fundamental in trading. And one of the great things about the echo indicator is it is going to keep you from doing the opposite. It's going to help keep you from doing the opposite of that. Capture the middle, not the highs and the lows. Now, I'm not saying swing trading is bad, And in a way, we're kind of swing trading using even this tool, and you can swing trade using this tool. But what you will learn to love about this tool is it doesn't try to pick the very bottom and the very top. Because again, what's the probability that in a trade, you're going to pick the very bottom and the very top? It's like very minimal, right? Probably less than 5%. And so why put those odds against you in your trading plan when it's much easier and much more likely to catch the middle? It captures runs. So the purpose of the echo indicator is actually tell you when a run's about to happen, tell you if the run's going to continue, and how long to stay in it. One of the things that you've probably heard if you've read any books around trading or listened to any gurus who are good investors is this concept of letting your profits run and cutting your losses short. Now that's a great thing to say, and I would even say it's kind of an abused cliche term. But the reality is if you can find a tool that does this, if you can have a strategy that does this, your trading results are going to look radically different, right? I mean, it just makes logical sense. Let your profits run, cut your losses short. That should turn into a profitable account. I mean, there's some radical examples of that where it doesn't. But for the most part, like if you just keep that principle, it's going to translate into profitable returns. The challenge is most people don't have a tool that does that, or they may have a tool that does that, but they just don't know how to use it properly. So here's kind of the echo indicator explained for those of you who haven't seen it, or maybe you have, but you need some deeper dive or deeper explanations. So the echo indicator has multiple time frames. It's not like layering your time frames from left to right in multiple charts anymore. It's all inclusive. In fact, you click one button and it loads multiple time charts, but all in one chart. And those chart times include the 1 minute, the 5 minute, 15, 30, 1 hour, 4 hour, 1 day, 1 week, and 1 month. It's all included. It's all there for you to look at in one snapshot. Now, this can get a little noisy for your eyes, but once you learn how to read this, it actually simplifies having to, click through a bunch of charts, open and go through a bunch of charts, where you can actually get some analysis paralysis by doing that. So the intention of doing it this way was to help add clarity and to kind of push out the noise that's unnecessary. Now, there's something I would say newer about this indicator that I added as for those of you who don't know, as the developer of the Echo. So I created this tool a few years ago. But the values, the run strength that you see here was something I added to help beginners learn how to use this tool. So it's not like a solid, this is how it is, this is how it always should be and how you should read it. It's really a tool to help launch you into this indicator, launch you into how to use it. And then after you get good, it's actually not something that I personally even use because you'll actually know how to read it. Therefore, you'll be able to translate your own run strength and value strength on your own. But for those of you new, just do this. Just keep it this simple. And here's how it works. So the numbers represent the strength, the run strength for that time frame. And they range from 0 to 5 or 0 to -5. And you can see there's a couple time frames on here where it's -1, 1, 2, 3, 0, -1. And the values start at the bottom and then they add up vertically. And then at the 1 hour, it resets, moves to the right, and then starts over and goes to the top. Now, the left values are more long-term, the right values are more short-term. And the way that this indicator works is the values are developed by the color of the signal. So if the block is green, that's +1. If the block is red, that's -1. So you can see, just follow with me on this, on the 1 month, on the left side value, the first color you see at the very bottom is red. And so red is going to be a -1 value. Then the next value above that on the 1 week is green. And so that's a +1. So what's +1 minus 1? 0. And that's where you get the 0 value. So then it goes, adds up again. On the 1 day, it's green. So that's a +1. 0 plus 1 is 1. That's why you have the 1. And then you can see again, green on the 4 hour, green on the 1 hour, and it just starts adding up. 1, 2, 3. So it's just simple addition, guys. It just adds up from the bottom to the top. At the 1 hour, it resets, moves to the right, adds up from the bottom to the top. And this is to help you identify run strength. And we're going to get to why this is valuable in just a second. So I'm going to give you a strategy that's not like, hey, go out and trade this with your live money strategy. It's a strategy to help teach you the tool so then you can start to build off of that foundation to actually use this tool in the live market. And I call it the 2x2 strategy. And the first step of this strategy is to identify if any of the values are positive or negative 2 or more. So it can be a +2 or a -2. And so you can see right here on the 15-minute, we have that setup. We have a 3 run value and then 2 blocks, which is the next step, that are green. So then you're going to look if the time frame that has 2 blocks of the same direction, 2 look for 2 green blocks, -2 look for red blocks. So if it's a positive number in this case, which it is, it's a 3, +3 on the 15-minute, I then go to my second step, and that's to look at the color of the blocks. In this case, there are 2 blocks that are green, and so now I've got a setup. Now, I want you to look at the 30-minute. We have a 2-minute, we have a 2 run value on the 30-minute, which would meet our first rule. But then I go to the second step, and that's to see if there are 2 blocks of the same direction or the same color. And the answer is yes, I do, but I have more than 2. I've got 4. In fact, who knows? It might even go further than that to the left. But the problem is if it's more than 2, it may be exhausted because this is a run value. The green blocks are indicators of the run. The value is the run value. And so if you've had multiple blocks of the same color in one time frame, it's likely that that's becoming exhausted. It doesn't mean it is. It still could continue, but you really want to get into a run or a trend at the beginning of the trend, not in the middle. And so I would only do this strategy if the value is 2 or greater, negative or positive, and then if the color, green or red, matching the positive or negative, has at least, or has the 2 blocks form up. And so step 3 is if the 2 boxes have posted, and that's a key word, posted, the value is 2 or higher, then you have an entry. So just like you see on this 15-minute, this meets my step, right? I've got the 3 value, I've got the 2 boxes, and then I have to wait for the post. Now, what does that mean? For those of you who are new or haven't traded posts before, it just means that that 15-minute time frame has ended. So a 15-minute time frame, just like a 15-minute chart, ends the new candle post or the new signal post every 15 minutes. And so you'd have to wait till, let's say 10:15 or 10:30 or 10:45 or 11 o'clock, because that's when the new post will happen. And so all I'm interested in is that the value is 3, the 2 greens post, and then whatever the new color that posts during that first minute or 2 minutes, it doesn't even matter what the color is because it's going to go back and forth, right? The last line is going to change colors as you're doing this live. So all you're going to look for is, did it post with the 2? I don't care after it's posted what the new color is, as long as it was a 2 or higher and had that 2 blocks. So the last step is to hold the trade. So now you're in it. It's like you're in the trade, and this is the funnest part. This is probably for those of you who are even traders with us, this is like the part that kind of gets me excited is like, well, now I get to hold this thing. I'm not just taking 10 pips of profit or, a little scalp off of this. I'm holding this thing. And so you want to hold the trade until you get at least a -2 value, in this case, at the time frame no further than the one above, or you can do a 2x2 setup in the opposite direction. But whatever you do, and I would actually stick to the first rule on this, is if you're taking a positive trade, in this case it's green and you're buying, then you're going to look for the opposite to get out, and that's just a -2 value. And the place you're going to look for the -2 value is at the same time frame or above. So you don't care if it's a -2 below the value that you took the trade on. You want it to be at the value or above the value. And then just for the sake of testing, the sake of like, back testing this and getting used to it, I would just stick to the -2 value in the beginning. Then if you want to move to a 2x2 setup to get out, that would have the same rules that you used getting in, okay? All right, so here's just some basic tips, things that I've ran into or obstacles that you might hit while you're doing this in the beginning that you want to kind of just keep in the back of your mind as you're testing this. So here's a question that kind of comes up. If a block, meaning the boxes, is longer than 2 and the value is 2 or greater, is it time to consider the trade? And the answer is yes and no. This is kind of that scenario we talked about. Look at the picture on the right. It's a 2, but it's a 3 block, right? It's got 3 blocks. Or you can see at the 3 value on the left side has 1, 2, 3, 4, 5, 6 blocks. And it's like, would you consider a trade here, Matt, based on the value being, meeting the rule, but the blocks is over the rule? And the answer is yes or no. What I mean by this is when you're personally live trading and you learn this indicator, you will find exceptions to this rule that make a ton of sense. But for beginners, for those of you who are new to this and you're just testing it, just avoid it. You don't need to do that right now. There's plenty of trades that meet this rule. Get in on the ones that work. And just remember that it's likely that if you see multiple blocks, you're actually getting in that time frame at a point that may be exhausted. It's like you're in the middle of something. So it's not really an entry or an exit. This is kind of just a waiting period. How long do you expect to hold a trade using maybe the 1 month, 1 hour, etc., right? It's between the 1 minute and the 1 hour. So this would be like your short term. How long would you hold it? And I would say minimum 15 minutes. For those of you who are like really fast scalpers and you're used to being in and out of trades in like 5 minutes, this is going to be a little different for you. You're going to be holding trades much longer. When I did my trade on Doge, I was holding it, guys, for days, sometimes weeks. And so I was obviously not using the right side. I was using the left side because of the more long-term values. I was placing my trades on the other side. But more importantly, I would say you've got to be ready to stay in stuff. That's the whole purpose of this. You can't catch a run if you're not willing to stay in it. And the echo indicator, fortunately, is designed in a way that's really going to help you with that. It's going to help you stay in the things that matter. But at the same time, you do want to be aware of the time frame you're trading. So if you're on the right side, obviously you're going to be in trades shorter. If you're on the left side, you're going to be in trades longer. You may start on the right side and then things build up and you start seeing signals on the left side, so you're going to hold it even longer. That's fine. But the whole purpose of this is to let your profits build, to let your run continue to grow. And oftentimes, I just can't tell you after looking at people's mistakes they made or why they're not doing well, and it's like, oh, you guys just aren't following this rule of letting your profits run and cutting your losses short. So I want to go straight into trading on this, get you guys acquainted with how to do this live. So I've pulled up green chart. I've got this up and running. I think this is live. Let's check and make sure. Yeah, so we're live here. Euro US. I've got the echo chart up just to show you a basic chart that you can create for yourself. I don't even need to share it. It's so simple. I've got a 1 minute chart, 5-minute chart, and a 30-minute chart. And you'll notice I have no indicators on my 5-minute, my 30. I only use these two charts to help me with my back testing. It's going to help you a ton with how to navigate through the back testing to learn how to use this. So I'm going to go through kind of some very simple steps, make sure everything's loaded, make sure the echo indicator has colors on all the time frames. If it doesn't, you can scrunch it like this and it will reload it. Or sometimes if you move it left to right, it will reload it as well. Also, if you let it run for a little while, the new data will actually propagate the data for the echo as well. So you just want to make sure everything's loaded right. Then what you do is you're going to go up to your replay tool and you're going to click, oh, it's already selected, but you're going to click this guy right here where this is like, it allows you to jump to a specific time. I prefer doing that than typing in a time on the calendar up here. So I click this, Make sure it's highlighted blue, that means it's selected. And then I like to use the 30-minute time chart to find a run. And all we're doing is we're just testing if I were watching the echo before there was a run, would I have been able to predict the run? Would I have been able to get into it based on this indicator? And would I have been able to get out of it profitably? I mean, that's really all you're looking for. And so the most recent run that I'm seeing right now in the Euro US just happened, it looks like 2 days ago, the 12th of January. You see this? The time frame's on the bottom. This is live. You know, there's a little run here. We could check that maybe later if I've got some time. But like, look at this guy. Look at this run. So we're going to see if we can predict this. So we're going to kind of click back just before that. We're going to load it. So now it's live. It's presenting the data as if it's happening live right now. And we're just going to go to the echo indicator. I'm going to just kind of walk you through what I'm seeing. Stop it as we're going through this and try to find the values and just follow the steps that I set up already. So for the sake of this training, I'm going to click on the 1 minute chart and we're going to click forward minute by minute. If once we're in this trade, I'm going to speed it up. I'm going to click on the 5 minute and move in 5 minute increments. Otherwise, we'll be here all day. So what we want to do first is see if we have a value proposition that happens on the indicator. So what we're looking for is a +2 or a -2 value first. And so you can see we've got lots of positive values, right? I've got a positive value on the 30 minute, +3 on the 15. I'm really not interested in the 5 and 1. That's just too short of time frame. But I like seeing 4 and 5s up here, right? Like that's a good value to see for a long trend. So really, the only thing I can see that's forming up right now is we got a +2 here, and then we do have 2 green boxes here. So we might have a buy trade setting up. So we're gonna kind of watch this and see if that's what we're gonna end up doing. So I'm just gonna click through this, keep an eye on that 15 and 30 minute. Again, we always trade the post. So just because it's showing this doesn't mean I'm going to trade it this way. Check this out, guys. 15 minute just happened also. 30 minute happened, but I want to make sure that it sets this way, meaning at the end of the 15 minutes, it posts this color. And when it happens, I'll show you what it looks like so you are clear on what that means. But you can see I've got a 3 and a 2. Looking good on the 15:30. I might buy here pretty soon. You just have to have it post this way. So there's the post on this. You guys see it? And so actually, I'm in this a little earlier than I thought I'd be. But look at 30 minute, it posts. So I'm just going to go back to this right here. 30 minute, 15 minute, solid. Got the 2. So it's like, yep, you're going to want to buy on this, Matt. 30 minute, I've got the 2, you're going to want to buy, but I got to wait for the post. When does a post happen? 5:30, right? It's going to always end at the 15 or 30 minute on the 15, 30 minute chart. So when I click next, that's 5:31. So they both posted green, and the value before that was at 3 and 2. So we're good. We're in. This is our entry. So I'm just going to draw a line to make this simple for you guys. This is our entry on this. And then we're going to watch it because now we're in. We're in the trade, the buy trade in this case. And we want to see when do we get out? What would be the exit? And so we're going to follow the exact rules that I set out before on how to get out. So the first rule in getting out is we're going to look for, in this case, a negative value. So we're going to hold this thing until we get at least a -2 value on what? At least the time frame above. Lucky for us, the 30 minute time frame hit at the same time as the 15. So I'm really looking for an exit on the 15 minute chart, a -2 value here or a -2 value on the 30. So we're just going to click through this really quick. I'm actually going to do it in 5 minute increments this time. And we're going to push through this and just watch for a -2 value. And you just watch, and I'll watch also, and we're just going to stop it anytime it changes. And you'll notice the top values are going to change the fastest because they're on shorter time frames. The ones below, guys, they're kind of locked in. It's going to take a lot of time to move these values. And so we're just going to kind of watch until we get that -2 value on one of these charts. Look at, we've got red blocks, but do we care about red blocks? No, we care about value first, right? Because it's saying we've got a lot of up pressure, a lot of strength in this run building up in the longer time frames. There we go. There's our first negative value. That met, did it meet the rule? No, it's not at a -2, so I'm not interested. Still in the positive. We're just gonna keep watching this. And what's really fascinating about this, what I love about this indicator, is notice where your eyes are. You know, maybe some of you guys are looking at the candles, but I actually don't. I try as much as I can to study the blocks, to study what's going on down here, because candles can make you nervous, right? Price can make you extremely nervous on your entry or your exit anytime it moves up or down in price. But if you stick to the rules that you set as you study the echo indicator, create a trading plan that's your own, you'll just look at the indicator and it will tell you what to do. So you're following your rules. You're not following the emotion of the price. So we're just kind of watching this still, looking for a negative value to form. Right now, I'm just feeling great. It's like I'm loving being in this trade. You know, for those of you who trade the Euro US, this would have been a great trade to be in a couple days ago. Some of you are probably trading it. You got a couple pieces in the run, but it's like you probably in the back of your mind were going, gosh, how could I have captured this? How could I have gotten inside of this? So we just keep going. There's a -1. Gosh, this thing is just going. And that's one of the things I love about this indicator is it takes out so much of the noise. Look at this chart, by the way, guys. How many of you guys would have saw this downturn and you would have been like, I'm out. I made enough profit already. There's no reason I should stay in this trade. And so you would have actually cut your profit short, which goes against one of the fundamentals. You want to let your profits run and cut your losses short. And so often we get in a run and we cut the profit short. And that's the flaw, I would say, in the strategy is we get scared. We let our emotions take over the trade. And this echo indicator is going to help you tremendously not do that. Okay, check it out. Finally, we got a -2 value. This is the first negative value of 2 or higher on a 5-minute chart or lower. We haven't gotten anything. You know, we've got a -1 value on the 15. So now I'm interested. I'm going to click it back over to 1. We're going to watch it a little slower because if I can get a -2 value on the 15-minute chart, we're probably done with this trade. And if you're following this strategy, you're definitely done with this trade because I want you practicing this before you start adding other tools that are going to help you be more successful using this. So let's just kind of watch for that -2 value. Nope, nothing. See? And this is why we have this tool, is you don't want to get out of your trades too early. So we're clearly back in this. Let's click it back over to 5-minute. We'll just keep moving. There's a -2 on a 1-minute. I call this a stair-step pattern. We're not going to talk about that yet, but this is actually something I look for around exits and entries. You'll learn it as you watch it, guys. It'll just become very apparent when you see these steps start forming. But we're going to follow the rule on this one, and the rule is -2 value. Oh. Let me go back. So here you go. It happened. It looks like it happened right around the 15 mark. You can see the 15-minute went -3. The 5-minute went -4. Guys, we're there. So the 30-minute was the trade that we got the 2 blocks. We also got on the 15-minute, but because we got in both, I was waiting for this 15-minute to go -3. Fortunate, the post of this, we want to wait for the post, obviously. We want the value to stay the same. So we're going to get to the end of this 15-minute run because I want this -3 to be solid. So we're just going to make sure that this -3 posts, which it did. So right from there to there, the -3 value posts. So this is going to be our exit, guys. Really simple. So I'm going to put it on the bottom of this to be fair. I don't want anyone thinking I'm taking extra pips. And then here's the fun part. And this is the part we really should be doing after the trade, not before the trade or before the trade ends. Now we evaluate our profits. And so you can see, guys, even with all of this noise, look at this turnoff. A lot of you and a lot of other tools would have said it's time to sell, or even it would have gotten you in. In fact, this is the danger with how some traders trade, is a lot of people would have gotten a sell signal here thinking this is the top of the market. And they would have sold, and then what would have happened if they hadn't taken their profit, within this really short run down? Well, they would have lost money. But the problem is fundamentally that was a flawed strategy because you were already in an uptrend. So why in the world would you have taken a short trade in any way, shape, or form? Like what principle or fundamental are you following taking a short trade in a long trend? You just wouldn't have done that. But you might have taken a long trade, a short long trade in the trend. That would have been fine. But the echo indicator just didn't give us those signals, did it? It told us to avoid that completely. We never got anything that said, hey, now that you're in this, you should reverse your trade or you should get out of your trade. We didn't get that until it had expired, until this thing had bled out. And you can kind of see even the price action that happened went very sideways. And the trend clearly had shifted. We were done with the trade. So what did this mean? In dollars and cents, how does this translate, guys? Well, you can see our entry was at 13.64. Let's bring up a calculator real quick. Let's do it this way, actually. And I just want to go through this really quick. So you're at 1.1364. We're going to subtract the top, which is 1.1440, somewhere around there. 76 pips. So this would have been a 76 pip trade, where if you were trading at a volume of 1, this would be $760. Really different. For a lot of you who trades around a volume of 1, you're used to making $100 on 10 pips and then leaving your trade. I'm not saying that's flawed. I'm not saying that's wrong. If there's a strategy where you can keep all your fundamental rules and do that, that's great. The difference here is we were in this trade holding it the whole time. And based on the time frame that you're in, you don't have to check this or even babysit it every minute or 5 minutes. If you got in at a 30-minute, you only have to check this trade every 15 minutes. And then if you start getting signals that are longer term, maybe your 1 hour, your 1 day, your 1 week, guys, you don't have to check this, but the time frame above, like the time frame above is the indicator around how often you'd even have to babysit this thing. So now a lot of people ask me, like, what do you do with stop losses? What do you do with setting a stop at the entry? And I completely agree. Like, no good trader would ever say, just open this trade up blindly and not have a stop in place in the beginning. And so you want to make sure that you do have an emergency, I call them emergency stops, placed below your entry. Meaning you've set up your basic support and resistance levels. You've got, based on where that support and resistance is, you've placed your emergency stop below that. And it's only there for if some radical volatility hits the market and swings and grabs you, that you're not stuck holding, thousands or hundreds of thousands of dollars in negative profit because you didn't put an emergency stop in. So always have an emergency stop in. What I actually like to do is once you get into the profit, you actually start putting in a profit loss, meaning that when the price comes back down, if for some reason the echo indicator doesn't pick up the swing or the change to get you out in a good place, it still guarantees your profit because you've moved your stop loss in to the profit margin. And what that does is it allows me to breathe. It allows me to go, okay, worst case scenario, I'll get out with some profit, but I really want to allow this thing to run. Now, here are some other things to be aware of with this signal or this indicator is when you're in zones, when you're in time frames that are like this, like these noise areas that aren't runs and they're just really sideways. Let me just kind of bring this in so you can see it. It's going to be a little difficult to get your entries. Or another place that you can see is like let me just bring this one up. Like this area. This area is going to be a little difficult to get into a run. Why? Because there haven't been very many. It doesn't mean that this one that you see here wouldn't have came to fruition, this little short trend. You probably would have picked that up on the echo. But this kind of noise that happens, you will often, with the echo indicator, have entries and exits that are very tight, meaning you'll lose and make a little bit of money in these like kind of flat areas. And once you get good at the echo indicator, you'll actually find you'll make and lose kind of on the same level. And so if you're setting your trade up, just get used to that. Get used to when things are setting up for a run, that you're not going to make a lot of money. It's not going to feel as rewarding as these little scalp trades that you may or may not be used to doing. But what happens is you'll take a profit, you'll take a loss, you'll take a profit, you'll take a loss. They typically wash themselves out. I mean, logically speaking, they would. But once you get into it, that's where the magic happens on these trades. And I will tell you, just go back in time. Go to any of these runs on the Euro US or whatever you're interested in trading, and just do exactly what I showed you. Just place the replay 30 minutes, maybe an hour before that happens. Let your mind get tuned out around what direction you're going, and just follow the rules that I gave you around the 2x2 echo strategy. And just from that strategy alone, see if it doesn't get you in and out of the trade in a profitable way. So then what do? You go, you backtest. Backtest this a ton. Get really clear on what entries and exits should and shouldn't look like. Start to develop your strategy. Then start taking it into the live market. And when I mean live, I don't mean real money. I mean live market. Because it's going to feel a little bit different when you can't click through a replay every 5 minutes to see the result. You're going to have to actually sit it out. And so I would say do that for about a week to 2 weeks of live trading. And then if you want to expose your actual money or financial account to this, at that point, if you've got enough back testing and enough live trading in a demo account, then you can take this into the real market. But don't ever, guys, just come straight from this and start trading this with real money. That would be ridiculous. And you'll be tempted to, right? It's psychologically, as humans, we get greedy, we get impatient, we want it now, and you're going to want to do that. And I'm telling you, don't. I'm telling you, be patient with this. Take your time with this. People that do really well in the market have lots of practice on top of what happens in reality. And so practice, practice, practice. Get very, very confident in your strategy. And then at that point, take it to the live market. At that point, if something goes wrong, if something's not working, stop immediately. Meaning if you're not getting the results you were getting in your sim or your demo trading or practice, stop immediately, reevaluate and ask, is there something I'm doing live that I wasn't doing in my practice? Because you don't want to keep exposing real money to something that's not working for some reason. And it's likely your strategy. It's like you're doing something in your live trading that you weren't doing in your demo and practice trading. The beautiful thing about this, guys, is I found as I've taught people how to use this, and even in my own trading, it's really difficult to break the rules. And that's one of the reasons I love this tool, is it's a rule enforcer. And I will tell you, I just know human nature. One of the main reasons I developed this indicator was to combat the psychology of a normal trader. And that's to do the opposite of all the fundamentals, right? For some reason in our brains, emotionally, we like to buy when things are high. We like to sell when things are low. Just look at everything that's happening, in our economy, in economics, in multiple markets like real estate, certain markets like the S&P 500 right now. people are programmed backwards. Right now, everyone's thinking that because things are good, they'll continue good forever. And that's not the truth. The truth is you don't buy when things are high. You sell when things are high. You don't sell when things are low. But we do this because our emotions take over, and then it puts us in a bad position financially, especially in any market that you may be trading. So, really excited to have you guys exposed to this. Anxious to hear some of your guys' results as you start to get it. But more importantly, more than anything, the main reason I did this was to help. I really am passionate about providing success to all traders, not just our traders. And I really want to see our traders winning on a higher level. And this tool, I believe, is an answer to that. Not the answer, but an answer to that. And so take some time to get to know it. Appreciate you guys taking the time now to hear it out. And if you have any questions or comments or concerns, get with one of our coaches or call our office. We are always happy to help. We want to make sure that your success is our top priority. And I really believe that this tool will help with that. So thank you.